Welcome to the Deep Dive, brought to you by Access Softech, the premier provider of digital banking solutions. Today we're diving into, well, a topic we've actually spent a lot of time thinking about ourselves, the complete business banking money cycle. It sounds straightforward, maybe, but it's a surprisingly tricky question. What's really missing right now in how financial institutions serve their business clients?
It is fascinating, isn't it? You see so many existing solutions, and they really hone in on specific things like user roles or maybe different transfer
Right,
options.
functional bits.
Exactly. But when you sort of zoom out and look at the whole picture, the entire financial journey for a small or medium business, that's when you start seeing these, well, significant gaps. We're really thinking about the whole financial ecosystem that a business swims in, not just, single transactions here and there.
Absolutely. And to really get a handle on those gaps, maybe we should unpack what we see as the, let's call it simplified view of that money cycle. It's sort of the basic rhythm. So first, a business provides a service or sells a product. Then obviously they need to send an invoice,
You got to get paid.
right? Then they get paid and that money lands in their account, usually at the credit union or bank. So far, so good. But then the cycle continues on the other side. They receive an invoice, maybe from a supplier.
Mm-hmm.
Money needs to get pulled from their account to cover that. And then they pay that invoice. And then, well, the whole thing just starts over. It repeats.
And what's really, really striking when you lay it out like that is how traditional business banking often only touches maybe one, sometimes two of those steps.
Right. Deposits and payments, basically.
Exactly. Receiving the deposits, making the payments, but everything else. The invoicing itself, connecting the invoice to the payment, reconciling it, trying to figure out cash flow between those steps. Historically, that's all happened outside the bank or credit union. Our research even suggests, small businesses might spend up to 5 hours a week just manually matching invoices to payments. That's huge.
Wow, 5 hours. That's a hidden cost right there.
It really is, and it raises this important question. Should credit unions just keep focusing narrowly on payments, or is there, a much bigger role they could be playing? Or maybe should be playing?
That really is the million-dollar question, isn't it? Because if credit unions do start expanding beyond those basic transactions, where's the line? How do you decide what makes sense for the credit union to offer versus, well, what you leave to the fintechs? Because those guys are agile. They're offering neat tools.
Oh, absolutely.
And they definitely want to compete and potentially take away business, take away those assets. It's a real strategic tightrope walk.
It is. It is a tightrope. But if you connect it back to the bigger picture, the credit union or the bank, they are fundamental to this whole cycle. They just are.
Yeah, the money flows through them.
Right. It's the main hub. It's the primary financial relationship. Money lands there, money leaves from there. That centrality, that's a really strong foundation you can build on. A fintech might have a great tool for invoicing, sure, but they rarely have that full, trusted, integrated banking relationship.
I see that. And I'm thinking especially about the smaller businesses.
Yep.
Our work shows they often aren't using something sophisticated like QuickBooks.
Not at all.
They're doing things manually, maybe juggling spreadsheets or using a bunch of separate online tools that don't talk to each other. It's fragmented.
Mm-hmm.
So for those smaller businesses, imagine if their credit union could actually cover all those steps we talked about.
Yeah.
Tools for invoicing, for collecting payments, managing expenses, all inside the banking platform they already use.
Yeah.
That feels like a potential game changer. We're not saying replace complex systems for bigger companies overnight, but for the really small businesses,
Yeah.
that opportunity seems huge.
It's huge, and the advantages, they cut both ways, clearly. For the business member, think about it. One login,
Yeah.
one place to see their whole financial world.
Simplicity.
Exactly.
Yeah.
That immediately helps with managing cash flow in real time, less guesswork, fewer surprise overdrafts, maybe catching opportunities faster. It just streamlines how they operate, makes the money side faster, more convenient, frees them up to actually, run the business.
Instead of just chasing the paperwork.
Precisely.
So flipping that coin, what does it mean for you, the credit union? It's not just about making members happy, although that's key. It's got to be about serious member and asset retention, right? You become indispensable.
Absolutely. Stickiness.
Yeah, stickiness. And it means you're competing head on with those fintechs that might otherwise, siphon off pieces of your members' financial lives.
Yeah.
Sure, maybe there's potential for some new fee income, but I think the bigger deal is a higher profile with your members, deeper insights into what they're actually doing financially.
Which lets you offer better advice, more relevant services.
Exactly. And ultimately, it just means more interaction, more time, more attention from those members. It deepens that core relationship.
The alternative path, really, is to just keep appealing to maybe the much larger companies, focusing on ever more sophisticated, complex batch transfers. You risk becoming more of a transactional utility, rather than that strategic partner. And that raises a fundamental question for credit unions. Which path offers more holistic value in the long run for all business members?
So thinking about all this,
Hmm.
for you listening, whether you're a business owner trying to manage all this or you're involved in the financial sector, it really comes down to considering that full financial ecosystem a business lives in. It's not just about the isolated transactions.
We've talked a lot about completing this business banking money cycle, thinking about your own business or the businesses you work with. What's one specific piece, maybe an often overlooked challenge in that financial flow? What's one missing piece you wish your financial institution could step in and help with to really streamline things? That's maybe something to mull over until our next deep dive.